Hello guys, in today's video I'm going to be going over several indicators for Europe, Germany and the United Kingdom that are not as well known as some other indicators, but they also have a great ability to forecast markets. Now, as soon as you leave the United States, the level of coverage in terms of stocks and in economic indicators drops off massively, just because America is the largest economy in the world, and so it is analyzed and the data is sliced and diced in so many different ways because it's the most important economy in the world. I'm sure my viewership knows that, but there are also important other areas that also contribute to economies around the world, either in the forex or bonds, or commodities, and obviously equities. Um, and also, once you've become accustomed to the United States, you want to broaden out and see if you can get exposure or get some investments and trades going on in Europe, because that would be the next logical step, as Europe has been around for a long time, has had stock markets for just as long, if not longer, than the United States, and have investable and tradable ideas as well. So that being said, it would be great if you could have a series of indicators that can forecast markets. And of course, yes, there is the IHS market PMIs, which are fantastic, and in my opinion, probably are the best. You also do have the ESIs, which, as I've shown you through my various other videos rather, and how great an indicator they are. But there's also other indicators, and that's what I'll be going over here. So I'll be going over for Europe, Germany, and the United Kingdom. For those of you that don't know, in Europe, Germany tends to be the powerhouse for Europe. So whichever way Germany's going, Europe tends to go that way as well. So that's why a few of the indicators will be focusing on Germany and the United Kingdom, because its stock exchange has been around for forever, more or less, and it has a lot of unique opportunities and is just as tradable as the United States. So let's get on with the video. So the first one here, we are looking at the Eurozone ZEW indicator. So this is like a sentiment indicator for Europe, and it dates back up until 1999. And you can see how it has ebbed and flowed along with the business cycle, giving you a good indicator for how people are thinking about Europe. So, what is the ZEW? Um, well, the ZEW is a research organization based in based in Europe, and they produce reports for Europe, Germany, and a few other nations on how things are looking at in terms of economics in these different regions. And they have a great record for predicting what will happen in terms of GDP. So it's a great indicator to be looking at. So if I go back to the spreadsheet, the next one I want to show you is the Euro SENTIX. This goes back again to 2002, and again it follows the business cycle and gives you a lead on which way things are going within Europe. Bad, worse, etc. How bad things get. This will be a great additional indicator to have in when you're looking at markets. And what is the SENTIX? Well, just like the ZEW, it's another research organization based in Europe that monitors different economies around the world and is basically a research organization that, much like Market or the ISM, produces reports monitoring the economy and what the outlook is going to be like. Come back to presentation. ESI we know all about. Just thought I'd go over that again. Here we've broken down the ESI into its different parts and how it all shows against the ebbs and flows of the European economy, and how this would compare to the other indicators that we have. So we know about that one. Then we have IFO, which is a research organization based in Munich. And just like their name suggests, they are a research organization and they forecast the German economy. And by forecasting the German economy, you can also forecast Europe, and you can trade assets for Germany across the board and also across Europe. Then, because if you're in Europe and you're not trading with Germany, then really your economy is not going to be going anywhere really. So if Germany's having a bad day, the rest of Europe is going to have a bad day as well. And so you can see here with IFO, so business climate and Germany expectations, it clearly leads downwards and then came back straight up in the time that it's been monitoring markets. And you see it's just bumbled around up until recently. And then we have services included and then current situations in orange. So again, seems to hold true for monitoring Germany's economic development. So now we go back to the German zoo. Here we have expectations in the blue line and the current situations in the orange line, going back to the early 90s. And you can see it has predicted the ebbs and flows of the business cycle for Germany rather well. So that's great to also monitor as well. Moving along, we have GFK, which is another research organization. I'll show you quickly here. Growth from knowledge, and they've been going for some time, and they produce products um, that monitor economies around the world. And here we're seeing that from the consumer climate, how the consumer has been responding to surveys over time since the early noughties, and for Germany, and you can see most of the time it's positive, but there are times where it has gone negative, and that leads to bad times. So here's the UK data for the GFK, and you can see how this has ebbed and flowed since the 1980s, along with the business cycle. And it seems like a great indicator for monitoring markets, especially for the United Kingdom, how things are going to go there in terms of their economy and therefore stocks, and also I guess forex pairs, bond yields, etc. Moving on, we have the UK CBI. So these CBI monitors the industrial trends. So we have the order books in orange, and then we have the retailing volume for the industrial production for the United Kingdom. And again, this dates back to the early 80s. Has a great track record of forecasting the economic development of the United Kingdom, and you'd be able to see which way the economies are going from the UK's perspective. Okay, and then here we have UK PMIs. Obviously, we've heard of the PMIs, services, manufacturing, composite, but there's also a PMI for construction for the UK, because those of you who know the UK or live in the UK, you know that the property market is a very important part of its economy, and the way in which that goes can very much dictate how the economy goes. Here we've only got the last 3 years worth of data, which is standard along the Refinitiv and Bloomberg terminals. But if you go to investing.com, you can get the back history and fill that in yourself up until at least the last recession. And then here we have the RICS housing market. So it's showing you how the housing market has changed in terms of confidence over time, going back to the 80s, and its ability to forecast markets and the ebbs and flows of the United Kingdom economy. And then the final two are also monitoring the housing market. Here we have the Halifax house prices for the United Kingdom. So we're going to see how the house pricing has changed over time. So you can compare this to the RICS housing market, and also compare this to the different housing stocks, I guess, within the United Kingdom, and then also the permutations of what that has for the greater market for the United Kingdom. And then finally, we have the United Kingdom house prices nationwide. So we have United Kingdom all properties in orange here. And then we have the United Kingdom house prices nationwide, all probably seasonally adjusted in the blue line here. And you can see that this has followed just along with the economy of the United Kingdom, and so is a great barometer to be monitoring the UK's economy. So hopefully this has shed some greater light on which economic indicators you should monitor for the UK, Germany, and Europe, and has added a bit more granularity to your process. Most people tend to do very well with monitoring the United States because those indicators are well known, and if they're not, by a little bit of googling around, you can find that information. This stuff is a bit more difficult to find and a bit more difficult to add to your process, but hopefully this video helps in showing you which indicators can help you with your process for monitoring Europe, Germany, and the UK. And hopefully you'll be able to add those extra stock markets to your trading arsenal, as it were. So here's a summary of the different RICs here. the RIC codes for the data platform that I'm always using, which is Metastock Xenith. If you haven't heard of this platform, it's a fantastic platform. Do check out my other videos. I go through the entire platform and some other indicators um, and how to use the platform, etc. There is a referral link in the description below. 3 months for the price of one. Thereafter, it is $99 a month. Do check it out. It has been an absolute lifesaver, and you can automate all this data into single spreadsheets, just like I have through the Thomson Reuters plugin. Just click refresh, and the whole workbook will refresh to bring you the latest data upon its release. So that's the video, guys. If you like the video, guys, please do like the video, share the video, subscribe to the channel, and I'll see you in the next one. Okay, guys, bye bye.